Hi, this is James Shug with Westpac London's end of day report for Thursday, March the 28th. Well, despite a whole bunch of negatives, including the fact that Slovenian bond yields have been rising sharply as markets move on to attack that member of the euro, which has a banking system with maybe 20% of its loans impaired, and a new government taken over from a government that basically collapsed because of corruption. A new government that's committed to sorting out the problems without outside help, but finding it increasingly difficult to do so because of market pricing of the debt of that sovereign. So contagion affecting Slovenia, despite Italian politics being a real mess with Bersani, one of the leaders of the political parties, that none of which achieved an absolute majority at the recent elections. Bersani saying that only a madman would want to try to form a government to run the country. And Mario Monti, the current caretaker Prime Minister, and of course former Prime Minister, he is still caretaker. He's desperate to get out of the job apparently. And then you got Beppe Grillo, the comedian and satirist, who perhaps would mind the job but wouldn't actually require his followers to adhere to any sort of party politics. So that's the prospect for the leadership of Italy, and it doesn't bode well for the formation of a government. Probably we have to see another election before too long. An added complication there is the president steps down in May, and any caretaker government can't actually operate beyond his tenure. So keep watching Italian politics. The Spaniards want more time to achieve their budget deficit reduction targets. I mean, the Cypriot banks opened today. No fresh news there. We know that capital controls are in place. I mean, effectively, you've got a Cypriot euro now and a mainland euro, given that there's no longer free passage of euros across borders. So, given all of that, you'd expect markets to be down in Europe, but they're not. We had German retail sales figures come out, and for the first time in a year we saw back-to-back rises. Now, retail sales in Germany are very dodgy statistics. They get revised a lot, they're volatile, but the market chose to focus on that. Even though they're still down 2.2% compared to a year ago, the market seems to have focused on that and ignored all that other crap that's going on. Also in Germany, we saw a 13,000 rise in unemployment. So there was actually some okay news and some not so good news in Germany, but it was the retail figures that offered the market most direction today. In the US, we had figures on GDP growth. The last revision of the fourth quarter numbers, originally reported at -0.1% annualised, then plus 0.1% annualised, now revised up to 0.4% annualised. So basically flat, but just not slightly contractionary like it was in that first estimate. We saw a 16,000 rise in the weekly unemployment insurance claims. That's actually the second rise in a row, and claims are back in the top half of the range they've been trading for the year so far. So maybe the labour market's not doing quite as well as the jobs numbers, the payroll jobs numbers seem to have been suggesting of late. Two regional surveys, the Chicago PMI, it slowed in March from 56.8 to 52.4. It's the lowest reading for the year so far. And also the Kansas City Fed Factory Index, it rose from -10 to -5 in March, but those two readings are the weakest pair of readings since the recession in 2009. So two regional surveys that undermine this sense that the US economy is actually doing okay. There's other data today, but they're the main points to mention. As I said, European markets are up, with the FTSE in London up 0.75%. This is just ahead of the close. The French market's up 0.9%, the Germans up 1/3%, Spain's up 0.9%, and the Italians up 1/3% today. The Dow's up 0.2% at 14,500. 552. And worth a special mention, the S&P 500, the broader measure of the US stock market, it at 1566, it is higher than its previous peak in 2007. In other words, the S&P 500 has recovered all of its financial crisis-related losses. So 10 trillion wiped off the value of the stock market since 2007, and it's recovered it all now, okay, as of today. In terms of commodity markets, the gold price is down 0.7%, $1,596 an ounce. Copper down 0.5%. Oil prices are flat at $96.62 a barrel, and the Aussie dollar at 1.040 is down about 0.5% on where it was sort of in Asian trading. Okay, that's it for today. Happy Easter, everyone. I'll be back next week.